The Crypto Markets Update is brought to you by KUCOIN, the best place to find the next crypto gem.
Well, joining us now to jump in on this discussion about crypto markets is Joe Orsini. He's Director of Research at Eaglebrook Advisors. Welcome back, Joe.
Thanks for having me on again.
Glad to see you again. So, let's talk a little bit about the short-term moves over the past few hours here. We're struggling to get above that $25,000 mark. It looks like that's kind of out of our reach just now when it comes to Bitcoin. And at the same time, we've also seen some action in the meme coins, a little bit of a decline there. What's going on?
Sure. So, in the last 24 hours, of course, we've had a little bit of a pullback. And of course, that's following a significant rally off of the lows in mid-June. So, when you kind of consider the move that's been made with Bitcoin up around 30% from those June 18th lows, Ether up about 115% from those lows, profit taking without FOMO and some traders kind of taking some off the table certainly makes sense. Now, does it really change the long-term story? Likely not. 25,000 regaining that level should provide some psychological positivity around the market. And ultimately that can certainly come. But, as I said earlier, we had a strong bounce, profit taking without FOMO, traders being traders certainly makes sense in this environment as, things under the surface, really in the macro situation, have started to feel like they are improving. And so, I wouldn't take too much into the short-term price action. We've had a great bounce and let's see what could happen over the next, this quarter and certainly Q4 as well.
When you say things look like they're improving, let's remember you're saying basically the inflation rate, which is still ridiculously high for what we're used to. I mean, we were spending decades a lot lower when it came to inflation, and just because it's not as bad as it was 2 or 3 months ago, it doesn't mean it's not bad now. So let's just be certain that we still have a lot of rough roads ahead of us. But besides that, we're also looking within the crypto markets. There's been some talk about a flippening potentially happening where the market value of ETH will exceed the market value of Bitcoin projected in the next year or so. And all that would be required is a doubling in the price of ETH from here. Which it was not just a few months ago. It was provided that Bitcoin's price stays the same. Do you think that's possible? Do you think that that's something that we could see? Or is it like, hey, if the price of ETH goes up, the price of Bitcoin is going to go up with it. So we're not exactly going to get that kind of flippening that people are all excited about.
Sure. So the flippening has been, talked about for many years now, and is exactly what you said. It would be the point in which Ethereum's market cap surpasses Bitcoin's. Now, if Ethereum were to double from here, just as you said, without Bitcoin moving, of course, the flippening would occur. But, there is a lot of beta in the market as well. And so it'd be surprising to us if ETH were to move, 100% without Bitcoin, surpassing maybe that 25,000 level that we were talking about. Now, if that were to occur, does it really change the long-term story for Bitcoin, the emerging store of value and global payment system? Certainly not. And when you kind of consider, Ethereum, which is a platform of decentralized applications and the evolution of the internet, the two really aren't really competitive to each other, right? And so they both can share success. A lot of our clients like to allocate to both Bitcoin and Ether to market cap approach. And in doing so, it allows their position sizes to grow alongside that potential flippening. So the ability to play both, you don't have to pick one. That certainly is an attractive opportunity because investing in digital assets broadly is a diversified portfolio. And so within that, you don't necessarily have to, diversify too far out of that. But it's smart to be Bitcoin and Ether as well.
So we don't want to let you go without asking this question that we ask a lot of guests, but everyone gives us a different answer, which is, what is the role of institutions right now? Because, last year that was like the main narrative of crypto investment. And now you just hear so many different versions of this. They're buying the dip, they're pulling out. Like what's going on with institutional investment right now?
Institutions are interested. We're having a ton of conversations on a daily basis with those that are, starting their due diligence process or in the middle of their due diligence process, and ultimately, they move slow. And when you're talking about digital assets, there's going to be a longer sales cycle and investment cycle within that because they want to feel more and more comfortable with an emerging asset class, which is totally fair, right? And so, you had a lot of interest and there's a lot of client demand, kind of pushing the advisors, and certainly when crypto is rallying, but, since the pullback, and this is an asset class where as price goes lower, there's less and less demand for some reason. But because of that, there's been a little bit more hesitation. Now, those that are really believing in the long-term story, they are finding this an attractive opportunity. Bitcoin has had now 70% drawdowns. Each one of those times, Bitcoin has recovered. And so when you're kind of considering a true long-term horizon and maybe not a trader's trade of a month or 2 months, or maybe even some days in some cases, when you're considering an investment over 1, 3, and 5 years, you have to imagine that these are attractive levels. And we talked about MVRV and some of the other valuation metrics in the past. But ultimately, when you kind of consider the macro storm that's occurred since November, and really what it's done to not just Bitcoin and Ether, but risk assets, but with equities, small cap growth off 41% as a max drawdown, NASDAQ composite down 33% max drawdown. So it's been an opportunity where you've had a macro pullback. Certainly some idiosyncratic events have made it more of an attractive opportunity, but really for long-term investors, what's important, technology continued to move uninterrupted throughout all of the problems, block by block, day by day. And that really should be the consideration for true long-term investors, again, 3 to 5 plus years out.